This episode was co-produced by Startup Days, the Swiss networking and business event for startups, investors, enablers, and corporates. Check out startupdays.ch to learn more about this year's edition, taking place in Bern on May 14th, 2025. Again, that's startupdays.ch.
I think the world has to learn from Switzerland. So you have exceptional infrastructure, you have an exceptional education system, you have universities leader worldwide, you are respected as a human, you have a healthcare system, everything works perfectly well. The whole ecosystem tells you a lot about the people that made it happen. It's not a result of chance or coincidence. This is vision, this is engineering, this is discipline, this is respect, this is dignity. All the components that makes you decide where you want to be are present in Switzerland.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. If you enjoy listening to our show, make sure to follow the podcast and leave a rating. And now, here's your host, Sylvain.
George, you're very well welcome to the Swisspreneur Show. It's a pleasure to have you as a guest today.
Thank you, Sylvain. I'm very proud to be here.
It's our pleasure. You are the founder of QBIT Capital, an early-stage venture capital firm with headquarters in Zurich, but also an office in Los Angeles in the United States. Before we talk about the world of venture capital, you are originally from Lebanon. You did your studies there, completed them, and then you got a job in Brussels. So you made the jump to Europe. And I wonder why and how did that happen? How did you end up in Brussels?
Yes, correct. I did my studies in end of 80s in Beirut. I grew up in Beirut. And I was fortunate at that time. The banking sector time was from 8 till 1 p.m. And the university where I was studying, we started at 2 p.m. until 8 p.m. So I was very fortunate to work 2 full years and finish my master in economics. So after my graduation, of course, I got an opportunity to start in the banking sector. And I started my career as a trader. And I remember back then, my mentor, my coach, he's in fact my best man, he comes from a trading background. And he said, listen, George, if you want to succeed in this business, you have to start your day very early, understand what happened in Asia, going into Europe, and you don't leave the trading until New York market closes.
That's a long day.
It is a long day. And once you're passionate about trading and markets in general are very, very dynamic, you learn a lot of things. And at that time, I used to use Reuters for market information. But we're talking about the 90s, beginning of 90s. So having a screen of Reuters was quite expensive. And the chairman of the bank had a shadow screen to the trading floor. And I was the only person staying till 10, 11 p.m. And he started seeing the screen moving in his office because he loved trading. So he started calling the trading floor and we built this relationship. And the moment they wanted someone in Brussels to head and lead the trading floor, he jumped in because we built this relationship and he said, George, we have this opportunity for you to go to Brussels. Would you like to go? And
Amazing.
That's my journey. And it was for 1 year and the rest is history. I lived now 35 years outside the country.
It all started with building trust, basically, with a great person that then supported you to take the move.
Now looking backward, I would say yes, one point. And the second point, because of course, he started asking me question. I was a kid. Asking me, what do you think about the market? What do you think about the Deutsche Mark at that time? What do you think about what is happening in Asia? So you have to jump in and learn and understand the markets. So I found now, looking backward, telling the story, expecting from someone quite senior to challenge you day in, day out, you start learning. Mm-hmm. And I remember I had this, for the chart, there was no chart like the way you see it today. I had this large pink paper, the small square, every morning coming to the office, starting the opening, low, high, closing. I used to do it manually.
Of course, yeah.
You know, do my Fibonacci retracement calculation manually. And that's how I learned this business.
That's amazing. And then eventually you did find your way into the startup world. I think that was linked to a family office. So tell us a bit more how you then went from trading, which is more, I would say, short-term oriented because you want to make profits on whatever is moving in the market, to venture capital and the startup world, which is probably very long-term, 10 plus years oriented. How did that shift happen?
Correct. So I moved to Brussels and I spent 11 years with the bank, trading emerging market debt and currency. And in 2001, during the internet bubble, one of my trading clients wanted to trade IPOs. Personally, I come from a debt background, a currency trading background. So I didn't really understand what was happening back then in the IPO market.com. So practically I refused to trade. I said, Jean, I do not understand what is happening here. I don't think I will touch this market. He kept pushing me, and then I said, listen, I cannot do it. So he decided to close the account. It was large relationship. And then he moved it to another bank. And then 8-9 months after, he calls me back. The money comes back, 90% lost.
Wow.
90%.
Oh my God.
And he said, you know, George, everyone was chasing me to get my business. You were pushing back and you were ready to lose the relationship. I have a lot of wealth. I have real estate. I have large portfolio of startup. I would like you to help me build my family office. And in fact, it was my first entry point in the entrepreneurship world. I built large team from scratch. That's one. And second, I got immersed in his startup portfolios. And they have startup really from all over the world, from India, Europe, UK, Spain, United States, Argentina. So this is where I got the sense of what is founders, what they are doing, board meetings, connecting the dot across that. And again, looking backward, I say it was my first inflection point in my career, this transition to the family office.
That's wonderful. And you stayed really true to your own principles to not take the short-term money and maybe regret it 9 months later.
Absolutely. Absolutely. Yeah.
My last question for this intro segue is basically, you were still in Brussels, right? So how did you then end up in Switzerland? Because, of course, you were already in Europe, but it's quite a move from Brussels to Switzerland, nevertheless.
Correct. So I received, once I did this shift to the family office, I got a very strong understanding of, first, the need of ultra-high net worth individual, entrepreneurs, having a diversified portfolio. And a very good friend of mine called me from Geneva, and Switzerland in the private wealth management, investment, is kind of the benchmark worldwide. So he said, George, we have an opportunity in Switzerland, in Geneva, would you like to join us? And that's how I took the decision to move with the financial assets, with the relationship, and then moved to Geneva, and then I spent 10 years in Geneva, and ultimately I joined JP Morgan, and I always spent my time as an investor from this moment. Yeah.
And then in 2021, you said it's time to start a VC fund. You started QBIT Capital, and I wonder, why did you decide to start a VC and not a startup yourself? Because this entrepreneurial world that you just set foot in, it was really exciting for you. I can see that in your eyes. And why not a startup yourself and a VC fund instead?
So maybe just to go a little bit back between Geneva and 2021. So I spent 10 years in Geneva, and this journey helped me first to expand my network. I worked in the Middle East, Kuwait, Riyadh, Jeddah, Dubai, Beirut. I traveled extensively, and then likewise in Europe, in the UK, in France, and of course in Switzerland. So it helped me really expand my network. And then after 10 years in Geneva with JP Morgan, they proposed to me to go to Southeast Asia. So I went to Singapore, and then in Singapore, covering Indonesia and Malaysia. So very interesting hub. It helped me as well to keep expanding my network and realizing all the clients and investors I worked with, they are entrepreneurs. That's how they build their wealth. So the learning curve kept going. From Singapore, I got an opportunity to move to Los Angeles. LA is a very large market for JP Morgan in the United States, but still an emerging market. And of course, California, never been there. Decided with the family, we moved to LA, and it was a wonderful journey. Yeah. And LA was, I always say, the second inflection point in my career. Now, in 2020, when the pandemic hit, it reminded me 2001. And I started thinking about where we were at that time. So 2020 interest rates were 0% worldwide. In Switzerland, you buy 50 years treasuries, was minus 0.5.
Crazy times.
And then it reminded me in 1990 when I started trading, AAA US treasuries was close to 12, 13%. You buy corporate debt, you get 25%. And you look at emerging market government debt in hard currencies, interest rates was close to 30, 35%. So imagine the return you get on the debt side. And within 30 years, we went from this level to almost 0%. So no more value.
Yeah.
Equity, at that time, it was a privilege to trade equities in the 90s. In 2020, it became a commodity. My son can go online, open an account, trade stocks for free, almost for free.
Yeah.
No more value, likewise. Private equity was reserved for clients with a total net worth of 500 million. So if you were not minimum total net worth 500 million, you do not access to private equity. In 2020, it became a commodity, accessible to everyone. All financial institutions, they set up vehicle, they put private equity, and you can buy very small amount. That wasn't unimaginable 10, 15 years back. Late stage pre-IPO, 10, 15 years back, if you were not part of a network and you know the right people, it was impossible to get access to a SpaceX of the world, to the Klarna of the world, to the Revolut of the world. In 2020, secondary market, you have platform, they offer you access to the secondary market. So the retail got into this space, and I found there is no more value. And when the pandemic hit, it reminded me the disruption that happened in 2001, from industrial world into the digital world. And I said, this is another opportunity that is going to shape the world. And I think you will only capture that at the early stage. And that reason decided to come back, be based here in Zurich, and set up QBIT Capital.
It all makes sense now. So you basically saw everything got commoditized that you were working in before, and VC was sort of the last space that was not there yet.
Correct.
I love that. And you have been all over the world in so many great places. Why did you specifically chose Zurich to be your headquarter?
When I was with JP Morgan, went to Asia, went to Los Angeles, my status was an expat.
Yeah.
So my home location was always Switzerland. That's one. So we were always connected to the Swiss ecosystem in a different way. And then when we took the decision to come back, we said, in what we are doing, definitely Zurich, it's the hub. But at the same time, the Swiss ecosystem, within 3 hours, you take the bus, the tram, the train, you can be everywhere, and you can meet founders, you can meet institutions, you can attend event. At the end of the day, you can still come back home and then be with your family. So the whole ecosystem, the story of this ecosystem, supported by institutions, by universities, by innovation, by hubs, for us, it made full sense to come back home.
The right place to be.
Yes, correct.
So QBIT, there's a meaning behind this name of your fund. What does it exactly mean, QBIT?
When the decision was taken to launch QBIT, I took 2-3 months. I worked with someone, Sophie, she's based in Australia. And I told her, listen, this is a new journey. I've been 30 years in the corporate world, as an entrepreneur within the corporate world. And I would love to really bring my background, what makes sense for me, the value, the vision. I would like to put them on paper. And I would like to define our culture. And then we had a very long discussion, and she was asking me the question. And I said, listen, one point, I'm passionate about physics and quantum physics, and having the feeling to be everywhere at the same time, in Jakarta, in Seoul, in Singapore, in LA, in Germany, in Australia. Like the network is so large and we're so connected together at the same time. So I said the quantum part makes a lot of sense.
Right.
So the Q of bit is quantum bit, and the bit is more the binary world, 0, 1. Said I want to be, if I go in this world, I want to go back 40, 50, 60 back, how venture capital used to be operated. And we want to be very clear with our founders. We want to communicate very clearly, either 0 or 1, full transparency. This makes a lot of sense for us QBIT. The dotted points behind the QBIT are inspired by the game Go. I play chess, I play Go. I was inspired by this game. It's Go. It's one of the oldest board game that exists. Started in China, maybe 3,000-4,000 years old. And if you understand Go, you understand the meaning of understanding. It's a very, very interesting game. It's a game where, unlike chess, where you have hierarchy, you have the king, the queen, the bishop, the rook. In Go, the pieces are just different color. You place them on the board, you grow organically territory in a very, very patient way. And we wanted to grow our business. Our vision is really could be reflected in the game Go. We will go slowly, but surely we build our network and we will keep growing within the ecosystem in Switzerland.
That's a beautiful analogy for venture capital, I would say, because there you need to be patient for sure.
Yeah. And the color, the orange color, inspired by the heat, that basically how quantum physics was kind of in the beginning of the century, heated at a certain temperature, 870, give you this wonderful orange.
Yeah.
So we kind of connected all the dots together.
Nice. That's a beautiful story for a choosing of a name. Now, you do focus on Swiss startups. So you invest in Switzerland. And I wonder, why is that the right focus for you as a VC? What is sort of the underlying value here in Switzerland? Is it like not, capturing up compared to the US yet? And do you see a lot of undervalued real estate here in terms of startups? Or is the development of the ecosystem so good that you say, now it's really at an inflection point and it's great to invest? Why is Switzerland the right focus?
You mentioned comparing it to the US. What I have learned in my career, Sylvain, is I deleted the word comparison in my mind.
No.
It's very simple. Because I think it's the wrong comparison. We see it very often in panels, in discussion. Everyone is looking to another location. How can we be like them?
Always, yeah.
And I think that's the more we think that way, I realized in my career, you lose focus of what you have. So the decision started really holistically. Look at the entire ecosystem as a country. And if I always say, if someone has to learn from someone, I think the world has to learn from Switzerland. And why I say so? First, look at infrastructure, okay? I lived in so many countries. I've seen what does it mean, all this additional resources you should have as a citizen. So you have exceptional infrastructure, you have an exceptional education system, you have universities leader worldwide, you are respected as a human, you have a healthcare system, everything works perfectly well. Now, you have challenges, of course, but the whole ecosystem tells you a lot about the people that made it happen. It's not a result of chance or coincidence. This is vision, this is engineering, this is discipline, this is respect, this is dignity. All the components that makes you decide where you want to be are present in Switzerland. That's one. Now, of course, you still need to build businesses and create value to your investor. Switzerland is leader in innovation. It's a deep tech nation. It's supported by fundamental, by research. You have the best university, but not only ETH, you have EPFL, you have University of Geneva, you have University of Zurich, you have hub like CERN in Geneva, you have hub like CSEM in Neuchâtel, you have PSI in Willigen, and so on and so forth. You have Basel, you have Bern, every place in Lugano, every place has its own hub. And they fundamentally, the research behind it, it's almost second to none. And then when you look at large corporation, because we always want to refer large corporation, there is a reason why this large companies worldwide, they have a presence here. There is a reason why everyone is coming to Switzerland to see the talent, understanding what is happening in the space, hire the best talent, go to the university, be present everywhere.
Yeah.
And between us, sometimes I say, this is great, but this is sometimes could be an anti-entrepreneurship.
Of
because
course,
you're really
yeah.
getting this best talent. So sometimes I will always say, be careful what you wish for, but it shows you the quality of what you have seen. The beauty of it, because why here? It's under the radar.
Mm-hmm.
And that's a cultural, which is fantastic. You don't have to go and talk and market around it and be very vocal. And between us, I feel the more you raise your voice about what is happening, basically you're kind of hiding something. So when you have good content, good quality, you don't even have to talk about it.
Yeah.
But you just need to take the time to go everywhere. Last year, I did more than 100 events in Switzerland. Mm-hmm. Startup event, pitch event, university event, networking event. You have the possibility to go out. It's a very vibrant ecosystem, but you have to make the step. If you just stay where you are, you might say, there is nothing happening here. And unfortunately, I heard that the Deep Tech Summit at ETH, on one of the panelists, say, Switzerland, the mountains. It's a wrong comparison. Then I can say, this country, Skid Row, or something. That's not the right way to look at it. Yeah. Why people say so? I believe they do not understand the market. They don't know what is happening here. And that's sometimes say that's fair. And last but not least, I think it's still fairly valued. And then when you think about early stage, because it's an early stage, so you have to embrace an early stage market. That's the beauty of the Swiss market. But when you think about the technology readiness, going into the business readiness, going into growth, I think because from the technology readiness to the business readiness, you can go from 1 to 10. Mm-hmm. And then from the business readiness to growth, you can go from 10 to 100.
Of course.
But 10 times are on both sides.
Yeah.
And the way we look at it, we believe the first part, your success 75, 80%, and your failure maybe 20%. On the other side, it's the opposite. Your success is 20%, and the power law will start applied. And this is where the dynamic start when we start comparing. Yeah. And that's why we do not compare. We observe what we have, and we believe there is very strong foundational platform in the Swiss ecosystem. We need to build on top of it and take it out.
I love this perspective of from 1 to 10 and from 10 to 100. It's both a 10x increase, basically. I never looked at it that way. I think that's a really good and refreshing perspective that also reminds us you don't need to build the next Google or the next Facebook here. But if you can go from 1 to 10, you can already have a very decent outcome also for founders, investors, for the whole ecosystem. So would you say it's also a bit more about being efficient? We don't need to build these mega companies here in Switzerland, but if you can build a technology based on great research and we can build a viable, suitable company that survives in the market, that's already a great outcome. We don't need the hyper scaling mode.
Correct. It is absolutely. It's efficiency, it's engineering, it's vision, it's repetition of things that are working. And again, I go back to my first example about why Switzerland and not other countries. I lived, as I said, in California 5 years. And I don't like to compare, but when I'm pushed into that, I had my car insurance, but I have insurance for the tires. Mm-hmm. So I have two insurance. Yeah. I couldn't believe it. The salesperson told me, George, please take the tire insurance. You will not regret it. I said, this is crazy. And every year I have to change my tire 4 to 5 times. Why I say so? Because the infrastructure is a disaster.
Yeah, right.
Right? Then public school. I don't want to go into the detail because it is another disaster. Mm-hmm. Unless you pay a fortune and you have the capital to support your kids to go to private school, no. It's the opposite. This is not happening this way here. Yeah. Same things going to the best university in the United States. Of course, you pay a fortune. So when you start building all this stuff, say, okay, there is something different here. So getting intimidated by the big names, which I call it more like the Hollywood style, because we created this intimidation. Everyone has to be like that. No. Why don't we create a new benchmark? Why you always want to say Zurich is the Silicon Valley of Switzerland? Wrong. Zurich is Zurich. But if you want to do something different, I would say our benchmark should be Zurich. Mm-hmm. I got this question from someone, asked me, yes, but you still need a benchmark. I said, yes, of course we need a benchmark. But why Zurich is not the benchmark? Why Switzerland is not the benchmark? And I think now, again, we heard so many panelists during the Deep Tech Summit at ETH Monday and Tuesday that it's time for the European ecosystem to start building their own benchmark and stop saying we want to be like someone else. Because this, in my opinion, it's a recipe for failure.
You always put yourself lower, right?
Absolutely.
You always compare.
Absolutely.
In that sense,
and
yeah.
that's wrong. And it's first is wrong. And second, you do not see what you have.
No.
So no benchmarking, set up your own benchmark, right? ETH or EPFL, it's not the MIT of Switzerland. ETH is ETH. EPFL is EPFL.
Yeah.
And people sometimes challenge me on this. They said, one second, then maybe MIT is ETH of the United States. Or Caltech is the EPFL of the United States. So, but this leads you to nowhere.
Sure.
And that's wrong. It's an exceptional ecosystem. We have an office in LA. We understand the value of being in the United States. It's a great market, as I said earlier. But let's take the best out of it and let's leverage what we have here and take it up from there.
Absolutely.
Yeah.
Your investment focus is also very specific. So it's not only Switzerland, but you have a very clear pre-seed and seed funding approach where you say post MVP, but pre-traction is fine. Either as a lead or co-lead, and with ticket sizes ranging from 350 to 750K, but also with the reserve of 1.5 million to follow up if necessary and if things look good. That is an incredible focus that you have there. How did you arrive at these specific numbers and ranges for your investment thesis?
Correct. So we decided, in venture capital, you can take a decision, apply power law, we sometimes we call it spray and pray, but it's a strategy. You can decide, I don't want to worry about anything. I want to just put small ticket. I will invest in 100, 200 startup. But this is more universal model. Mm-hmm. I think back to what we mentioned earlier about the technology readiness, the fundamental research, the quality of universities and research in the Swiss ecosystem could justify this entry level to support these founders go to the next level. Yeah. That's one. Second point, as I mentioned earlier, it's fairly valued. So you can step in and you can really have an influence. And third, that was very important, we didn't want to just be a financial investor. So we created an ecosystem within QBIT based on 3 pillars that really help us support the founders go to the next level with all the challenges that comes with it. The first one is that we want to do something a little bit different. We engage with some investors. We have some LPs in the fund, are entrepreneurs themselves today. So we have 6 of them, spin-off from ETH, Joël, Ben, Frédéric Weil, founder of Open Web Technology, acquired by Swisscom, Walid, Jean-Luc, Lucas, based in London, sold his company to Lyft. They are all entrepreneurs, invested in our fund, but they are passionate about the ecosystem. So they became part of QBIT. We have QBIT email. We meet on a weekly basis. They meet the founders. Sometimes they coach certain founders. They can guide them. They can validate certain technology. So they are very engaged with our portfolio company. And this is an additional resources going to the founder. That's the first pillar. Yeah. The second pillar, we have a QBIT Pirates. It's a growth hacker. This relationship started with Speed Invest Pirates in Vienna. So we provide around 800 hours support to our portfolio company. And that's at their disposal with no additional cost. Building your website, improving your pitch deck, a pricing strategy, go-to-market strategy, anything you need to grow at this stage. This is 800 hours on a yearly basis for 4 or 5 years. It depends on the investment period. And then we provide this to our portfolio company. And in general, when we finish our due diligence, and we can maybe discuss this later on, the process, we organize a workshop session for 3 to 4 hours. All the stakeholders are present, and then they start connecting the dot where they can add value to the founders.
Great.
And then the third pillar, because we believe being able to go international is important, we have our venture partner team based across the globe. So Anne Sutanto, she's based in Jakarta, very successful businesswoman, knows the market inside out. She's always there to help us, help some startup opening door and go into the market in Southeast Asia. Jana, she's based in Sao Paulo. Jana, she's from Zurich. She's been living there for more than 18, 19 years. She built one of the largest angel investor for women in Sao Paulo, very well connected. She helped us in this opening door in Sao Paulo. Niels Wagner, based in Zurich. Niels, it's the Rehau Group. They are present in 52 countries, large industrial polymer group, always there to help us and connect founders with startup. Dieter, based in Vienna, very well connected in the VC ecosystem, mainly late stage and above, which is fundamental to our journey to bring to the founders. Mm-hmm. And then Keith Larson, based in Portland. Keith spent 23 years at Intel Capital on their investment, very good, strong expertise in deep tech, semiconductors, and sometimes they can step in as board independent board members on our startup to help. And Phil Ressler, based in LA, spent more than 45 years, entrepreneur, built some businesses, venture capitalist. He brings a lot of value to our founders. So that's these three pillars are to support our business. That's the model we said. Okay. We said then let's reduce our number of portfolio company. Let's spend 3, 4, 5, 6, 9 months with them before we decide to invest, understand the problem, understand the team, and then we provide all these resources to increase the probability to make it happen in a good way.
So it's very clear you don't follow the power law investment strategy of spray and pray. You just say, hey, we want to really pick the right ones and we want to spend a lot of time to evaluate, to really understand before we make a very strong conviction bet, so to speak.
Correct.
And there I wonder, like it sounds a bit, if I compare this to the stock market, right? It sounds a bit more spray and pray is like, okay, I just buy an ETF, worldwide global diversification, and long term, I get the average return. So in that sense, you do stock picking, very with strong conviction. And often people say in the stock market, this does not lead to outperforming the market in the long run. How do you make sure that you will outperform with this strategy?
At the end, your investors they drive your behavior. All our LP are private, so we don't have institution, we don't have pension, entrepreneur, private investors. When we went out and then discussed the Swiss ecosystem, we never mentioned the word performance.
Okay.
And of course, this still to be proved that our business model in 7, 8, 10 years' time will deliver performance. We said, let's build a strong foundational model. The performance, it's a byproduct, it's the result of what you do. So we're not focusing on performance, we're focusing on doing the right thing, taking the right decision at the right time with the right ecosystem. And once we do that, we believe the outcome is going to be powerful. And that's how we position it with our LP.
Yeah.
Some LPs, they ask me like, okay, what do you expect to generate? We push back on that. Mm-hmm. Because I can tell you, excite you. If I'm a good salesperson,
of course,
I get 3, 4 times, come in, they'll get excited.
Yeah.
That's not the way we operate. Of course, we know it goes without saying, we have to perform. Because Fund 1, you get the support. Fund 2, you will get the support. Fund 3, if you do not perform, that's it.
You're out of business.
Exactly.
Yeah.
The story is over.
Yeah.
So that's how we looked at it. So performance is not our driver. We believe performance is the outcome of something very strong.
I love that because it's also a bit like a startup. One startup is focusing on just raising round after round, and great, but at one point you have to deliver, right? And the other startup is just focusing on solving a real customer problem. And there, the rounds, they basically, not really, but almost raise itself because you solve a real problem and you build traction, and then investors want to be part of that journey. So I think it's a bit a similar state that you focus on delivering not performance, but you focus on investing in the right companies, and performance will take care of itself.
Absolutely, absolutely. And we look at ourselves, we are a startup. QBIT Capital, we started from scratch, from zero.
Right.
We built it step by step. It's not just, as I said, we are FINMA licensed. We set up our entity in Switzerland. We got the license. We built a business that can really expand on so many fronts. My focus is venture capital. The vision is much bigger, and we will develop it over time. But we are a startup as a team. That's how we started the journey.
Yeah. You also mentioned that you spend a lot of time with the founders before you invest in them. So these 6 to 9 months that you were referring to, How do you do your due diligence over such a long period of time? I'm really curious to learn more about that.
This is, in fact, is fascinating to get to know the founders.
Oh.
So we meet on a regular basis, we give feedback, and we observe how they react.
Oh.
We go out for lunch, sometimes small stories, some question. We like to connect dots. Personality, character, feedback, listening to feedback, taking action. Mm-hmm. And one of them is one of our portfolio companies, a spin-off from EPFL. We really spent 9 months or 10 months with them before. But they took action on every feedback without us asking. Like not telling them, you have to do this. So we give advice, we engage, they are very open, and you start thinking, this is amazing. Like if now they are going into this direction without us, this is what built this relationship. Mm-hmm. So that's why we like to take our time to really understand the problem. The problem is a very big driver, and of course the team would make it happen or no. So
of course.
So that's where we take the time really to understand. We like to travel with our founders, meet their clients. We do a lot of reference call to understand the pain point. So the problem validation is part of this process, I would say, as well.
How much of that process is then really like a checklist, where you say, okay, check, and how much is gut feeling that just forms over all these interactions?
I think it's a combination of both. I always refer, you mentioned earlier, efficiency. We are Swiss focused. We do it the Swiss way, and we will only invest in Switzerland. So then I would learn from the Swiss ecosystem, which is efficiency, discipline. So yes, you have to build something disciplined, focused, efficient, but there is this relationship, this gut feeling is part of it. So many times within the investment committee, like the numbers, everything is great, but there is something, I still don't feel the founders.
Right.
I feel there is something missing. Mm-hmm. And these moments are very important. And we have some cases, same at the Deep Tech Summit. I met the founder. He said, I will keep pushing. I will prove you that you were wrong not investing in our startup. So these things happen, but I think that's the beauty of, and we built our CRM, and we have the portfolio companies that we did not invest in, but we keep tracking to understand why we missed this opportunity.
Right.
And one of them, in fact, we were stepping in for a seed round. NVIDIA acquired them. It was a spin-off from ETH. Yeah. And we realized we were slow in the process because we were working on this seed round for them, and we wanted to get engaged. Every LP visited us in Zurich. We spent time with them. They tried their product. It was amazing. We were very excited. And overnight, we were still early at the beginning of our journey, but because we said we want to take our time to decide. And then next day, I received a call. We were acquired by NVIDIA.
Boom.
So we invited them to our office, the whole team. Just let us know, what did we miss? Yeah. And then our conclusion was we took long time and we discussed it internally. And we said, it's okay. That's the price of if we want to build what we are doing, sometimes we are going to miss great opportunities. That's okay. Yeah. But that's how we will operate.
I wonder with that process, I really appreciate you sharing all of this because it helps people to better understand how VCs think and work. But I also wonder with this process, don't you also face a bit of an adverse selection problem where you say, hey, all the good startups that have so many different offers to choose from, they will be off market in like 1 or 2 months because there's someone sweeping in, making them an offer. They take it, boom, and go back to building. And these 6 to 9 months, then after that time, you sometimes only have it's a bit of course, over-exaggerated, only the bad startups that don't find any money from someone else left. Is that something that you see happening, or is it the opposite?
Of course, it's going to happen, no doubt. But I can give a counterexample that some founders, exceptional, they are part of our portfolio company. They got terms from great VCs, and they told them no. The feedback that you guys took time to understand our problem.
Yeah,
you took time. They came, okay, some question, but in fact, they didn't really understand our problem. So sometimes founders, they value this. And we push founders, say with the same way we do our due diligence, you do your DD on your investors. Yeah. It's not only one way, it's both ways.
Absolutely.
So it could happen on both sides. I'm not saying never no or never always yes, but it's a decision. And that's why we said we're ready for this price.
Yeah.
And we're very happy of the quality of portfolio that is coming. So I don't think there is lack of opportunity in the Swiss market.
It reminds me a bit of the family office example that you shared at the beginning, where you said, I just don't feel comfortable here, and you say no. So you really stick true to your principles. And it's a philosophy in the end that either matches with the founders or not, but that's the basis of a successful collaboration for the long run, right?
This is your biggest assets.
Yeah.
Your credibility, it's your biggest asset.
Yep.
It's like, it has a price. The price is very high because you have to stick to what you say. If I say that, you will put me accountable on it.
Exactly. Yeah.
So it comes with a lot of work, a lot of discipline, a lot of focus, a lot of tough decision to be taken.
Yeah.
But that's the price of it. And we are very proud and we are very happy that that's the way we operate.
That's great. I also want to talk about running a VC, because for me, that's really interesting to learn more about. And one of the biggest challenges I see is you get the money, right, from investors, but the potential returns, they take 5, 10, or even more years to really materialize. So you have this constant pressure of, okay, we will need returns, but the big payout, if it happens and if everything goes well, happens so much later. So how do you keep financing all the operations and keep, the show afloat while having invoices to pay if all the return only happens years from now?
Yes. Listen, it's a very good question. A couple of things. First, in venture capital, it is considered the highest risk when it comes to investing.
Yeah.
So selecting the right LPs is fundamentally important. And what do I mean by selecting the right investors, limited partners, to understand their balance sheet and being able to have a discussion with them? I can tell you so many times, some LPs, they love what we're doing. They say, George, I will put 1 million. I said, no. You only put 250. You commit to 50 because your balance sheet cannot afford 1 million. So then you explain to them why this makes sense and this doesn't make sense. 1 million, you will be very happy. But you have the privilege to push back on that. So you have to understand the balance sheet of your investors. That's one. Second, they are all entrepreneurs. So when they look at their balance sheet and then how much they are generating from dividend or coupon payment or rent income, you help them think, carve out certain percentage of your cash flow without using your capital and fund a long journey in venture capital. Because you have the public market, you have late stage, you have mid stage. So the journey from the birth of innovation till becoming an established company, it's interesting to be invested across the board. But then you just need to understand how much you allocate. So we don't have this problem because we take the time, we push back, and some client, we really drive them and then fund their private equity. That's one. Second, the capital call is over 3 to 4 years. So you can, if you today, Sylvain, you tell me, George, in general, I commit 150 to 200 every year for startup.
Yeah.
Well, I'm a wealthy individual. I can carve out every year 200K. So either you do it individually or you say, George, you are a professional VC investor. I can commit 800 or 1 million and you do it. So this 200 is basically spread over 4 to 5 years.
Exactly.
So you commit to a 1 million and I will do it more on a professional way.
Yeah.
So that's how you can spend time getting to know your investor, their balance sheet, how they think about risk, and you can propose what is the right solution. But we take the time for that because it is a challenge. Now, when we started, as I said earlier, we are a startup. We bootstrapped our business. We have to fund our business.
Yeah, exactly.
Of course, first year was earning nothing. And then you start growing because this is where you generate management fee and that's what cover your cost. And there is a certain threshold you have to reach. Say, okay, now I can really capitalize on it and grow from there.
What is the standard fee structure? Usually you have the management fee and then you have a performance fee, usually called carried interest.
Correct.
What is the regular fee for these two?
For early stage, early stage, we have a 2.5% management fee during the investment period. Mm-hmm. And then it goes down to 2%, 1.5% and 1%. And it plateaued at 1%.
Okay.
That's how you cover your cost and that's how you build your business. And when you have an exit, basically first you have to pay back your investors, pay back any investor or any ecosystem, they are part of the carry, and the remaining goes back to the partners.
Great. Yeah. So the math is actually pretty simple. You need to see how much are our running costs, our operating costs for salary, office rent, and that has to be covered by the management fee.
Correct.
And everything else is upside.
Correct.
I see. Now, I also wonder, who are your investors? You said you don't work with institutional investors. You work with private or through companies, of course. But who are your investors that trust you with their money?
I would say today around roughly 25% of our LP base are based in California. Wow. And I'll come back to this. Maybe we can link it briefly to the US-Swiss comparison. But
sure.
25% are in the UK, Germany, Austria, and Italy. 25% Asia, Middle East, and 25% Swiss investors.
Yep.
The US-based investors, basically, it took us a long time to prospect. Of course, I knew them. We have good relationship, but they couldn't believe first the Swiss story. We have to tell them the story.
Yeah, it's not on their map, right?
No. And then the family office, they traveled. It's a single family. The investment team, they traveled to Zurich. We visited the university. We went to the campus. We met with founders. They couldn't believe what they're saying. I never thought that I would see its Swiss innovation ecosystem this way.
That's cool.
And now they became our anchor investor. They're a very large investor. They extended the term sheet. They acquired 5% of the operating company as well. Mm-hmm. They created value to what we are doing. They look at it this way. And we have a second large anchor investor based in London.
Okay.
So this is our LP base.
Got it. And is that also the result of your network that you built all across the globe, that these people that you met, built trust with, etc., over so many years, that they now come back and invest with you?
Part of, and of course, my team, my partners, going out, meeting new people. People are watching you. You know, like Swiss market, yes, is very vibrant, very large. But as well, people, they watch you, they observe you, they see what you're doing. You know, it takes time to get to know everyone. So some are network, some within the team, with a relationship. Some we met them newly investor. Most of the Swiss are new, basically. Zurich, mainly inbound, I would say, rather than prospecting outbound.
That's great.
They observe you, what you're doing. They reach out to you. They connect with you. And we were really very pleasant, very happily surprised by the traction with the Swiss ecosystem.
Fantastic.
That's our LP base.
And one last question there. We often hear about startups complaining that, hey, it's so difficult to raise funds in the current environment. Now it's getting a bit better, but overall the past 2 to 3 years, they were not really fun after the hype time. You also have to raise funds, right? As a fund yourself, as a VC, how do you see that? Is it also more difficult for you to raise funds, or didn't that change too much?
You want my honest answer?
Of course, of course.
We don't even ask this question to ourselves.
Okay.
Difficult, of course. Do you know any business that is not challenging and difficult? But that's part of the equation.
That's business life, yeah.
And therefore, we don't think about it.
Okay.
We just deal with the challenges. Take example, we launched our fund in 22. I remember the week was Russia invading Ukraine.
Oh, man.
Then we had Silicon Valley Bank.
Yeah.
We had $1 million sitting at Silicon Valley Bank. We had a meeting with our lawyers in the United States to understand the feedback. George, you just keep the loss at the fund. Every LP, every fund, that's how they do.
Yeah.
With my partners, we decided to take the loss. So Friday night at 2 a.m., we sent an email to all our LP explaining the situation. Mm-hmm. We reported to FINMA, to our Grant Thornton, our audit. This is what we are doing. And we decided to take the loss.
You as partners?
As a partners.
Wow.
So we sent an email to our LP telling them, we will take the loss, your money will be protected, and your commitment will stay as it is. Sunday, they bailed out Silicon Valley Bank. Of course, we got the money back. And the LP, they were in the fund. Some of them, they doubled their commitment.
Holy shit.
Exactly because of this type of decision.
Yeah.
So this is what we have experienced. Now, either I have two options. Either I complain, or of course, challenges are going to be here all the time. we have to understand how to deal with it. So we don't ask this question. It's tough. Of course it's tough.
The motto is you make it work.
Yeah, of course.
That's it.
Yeah.
But that takes some guts. I love that. This spirit of, hey, we protect you. We are in this together, and we got your back.
Listen, it was tough. I can tell you, it wasn't an easy decision. It was a very tough decision for us. There was no plan B.
Yeah.
That was for us the only decision you would have taken at that time.
I love that philosophy. You also wanted to talk about the US-Swiss comparison. I know you hate comparison, but now from an investor side. So you said you have 25% based in the US. How are they different to the Swiss investors, for example?
Their risk appetite is much bigger.
No.
Okay. Their investment ticket is much bigger because they think about a very large market. Mm-hmm. So you are in an economy where the size of the economy is more than 25, 26 trillion. So the size, they look at it from this perspective. Their network are very large billionaires, entrepreneurs. So investing small ticket doesn't matter for them.
No.
So that's how they look at it. And basically, we realized during this process, in fact, they start valuing this step by step. And that's why they got excited. Said like, okay, but this is no more talk. These are doers. So one of our LP, that's the largest one in LA, their Swiss global exposure, they work with venture capital. So for Europe, they have a very specific VC that covers Europe for them. And when they discovered the Swiss market, he introduced me to the partners at the other VC, saying, listen, I've been to Switzerland. It reminds me, venture capital 30, 40 years back.
Wow.
You only have great talent, no talk, doers. They go step by step and they deliver. And I spent a couple of days in Zurich. I was impressed by what I have seen. And hence, they committed. And by the way, when they committed to our LPA as an LP, we received on top a term sheet to acquire this 5% in the operating company. So I wasn't even thinking about it that way. But this is where they saw the opportunity.
Yeah, makes sense.
So I think this is interesting point.
Yeah.
And that's why I said earlier, the family office in Brussels was the first inflection point in my career. The second one was living in Los Angeles. So lived there 5 years. And this is where you can start connecting the dot. You can see the opportunity.
Yeah.
And I think there is an exceptional opportunity in the Swiss market. Just being able to go out, connect the dot across every region, I think it's a hidden gem.
I fully agree.
Yeah. That's what I got from the US investors.
We're in a very interesting spot in the Swiss ecosystem at the moment. If you look a bit in the future, I know QBIT is focused on Switzerland, you're industry agnostic, but what is some vertical that you're particularly interested in for the next, let's say, 12 months?
12 months is like tomorrow.
Okay, that's fair. Okay, let's say over the next 3 to 5 years.
Yes, yeah, I think it's fair to say 3 to 5 years. I believe we are at the beginning of a transformative, disruptive technology. And I think now we have the foundational model, AI, is going to shape every sector. So think about the internet in 2000. 20 years came after built everything we have built.
Right.
So now we are really at the early stage of a fundamental disruption that's going to shape literally every sector, every economy in the world. So I think we will keep focusing on the integration of artificial intelligence, how you use your data. The quality of engineering is very important, right? Yeah. Today, you need to understand who is building what on top of the foundational model. It's a commodity. And then what you build on top of it, this is the quality of engineering, understanding the problem, how you can understand the data and how you can build from that. So that's our focus will be here. We like quantum. And I think it's very, very interesting what is happening today. I think Demis Hassabis, during his lecture at the Nobel Prize last year, he mentioned and he challenged that even with classical computer, with the AlphaFold, and that's how he got the Nobel Prize with his team, saying that with classical computer, we were able to predict the 3D folding of protein for 200 million protein within 1 year. Means classical computers still being able to deliver exceptional outcome. So quantum, in my opinion, it's a long journey, but we like as well quantum physics and quantum mechanics and quantum computing, sensing, everything around this technology will be our attention in the future.
You talked about AI and have a very provocative question for the end of the show. If you look at the game of being a VC, AI makes especially software companies way more efficient. You can do more with way less people. So I wonder if in the future, these software companies, B2B software companies, if they even need an investor like you, because they can get so much more done and might not even need money anymore.
Yes, obviously, I think it's a fair question, but the way we look at it is simply we embraced AI, we embraced the transformative impact that will have on everything, and we are implementing anything that can add this value. So maybe tomorrow they will not need part of what we're doing, but we will already have shifted or adapted to the new situation.
Yeah.
So as I said, we are a startup as well. We're not just providing money. Yeah. So we are a startup. We think about pivot. We think about changes. We think about how to integrate. So we will find always an opportunity for to position ourselves.
That's the right spirit. So George, to wrap up the episode today, I also have some rapid fire questions for you. I'm just gonna fire right away. Lebanon, Belgium, or Switzerland?
Switzerland.
Easy choice for you. Regret making a deal or regret not making it?
No regret.
Never. What's the biggest red flag for an investor considering a startup's pitch and team?
Team.
Always, yeah. What do you prefer to have right? The problem, the team, or the timing?
The team.
Also the team. And what's the perfect size for a pitch deck based on your experience?
10 to 12 pages.
Great. George, it was a lot of fun. Thank you for coming on the show. All the best for the future and see you very soon.
Thank you very much, Siva. Thank you.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.